Welcome back. We've got bad news for Facebook's IPO just days ahead of its stock market debut. General Motors says it is no longer going to pay to advertise on the social networking giant. It will, however, continue to use Facebook pages to market its vehicles, allowing it to reach consumers directly at no cost. Marty.
Well, Wall Street is gearing up for the social offering of the year. Main Street appears to be divided. CNBC's Kayla Tausche has the results of an exclusive AP CNBC Facebook poll.
We'll start with the simplest yet the largest question facing potential shareholders. Will Facebook be a good investment? The public's answer was, well, maybe. Half said buying Facebook stock would be a good investment, but those numbers are only slightly better among active investors. And only 3% say a $100 billion valuation would undervalue the network. People also not very sure if the company will continue to be successful. Very mixed views there. 43% say it will be, but 46% say it's going to fade away as new technologies come along. Pretty hard to believe for something that has 900 million users. But where does that uncertainty come from? Well, it all seems to start with the man in charge. For all he's accomplished as CEO, the public has surprisingly tepid views of him as a leader, with only 18% of respondents feeling very confident about his ability to run a large publicly traded company like Facebook. 60% weren't so sure. And then there are the trust issues about Facebook. Just about 60% of Facebook users say they have little or no trust in the company and keeping their personal information private, even though they're putting that information out there themselves. But still 60% say they don't trust Facebook with it. Separately, more than half of respondents say they wouldn't feel safe using Facebook as an e-commerce platform. And that's not good news for the company that's trying to expand in that market. And finally, there's the lack of ad interest. 83% of respondents saying they never or hardly ever click on that sponsored content, even though that's the engine of Facebook's growth and profit engine. Now, what does it all add up to? Well, a whole lot of uncertainty, especially for long-term investors. But for those just wanting to witness an historic IPO, they won't have to wait much longer.
All right, Friday of the day. All right, for full details of AP's CNBC's Facebook poll, log on to our website at cnbc.com. Elo?
All right, Mark, Facebook ostensibly is not allowed in China. It's a closed territory, although you can get it through VPNs. Could some of the China names be an alternative to FB? Renren higher after hours after their quarterly results came in ahead with their revenues in the positive column. Gamers, the darling of the often called Facebook of China, setting revenues up 56%, $32 million in the end. Meantime, Sina.com also pushing higher as well, despite a net loss of $13.75 million. Their quarterlies did beat targets after ad revenue shot up 9%, despite a relatively weak Chinese market. Big question, though, is the Facebook effect going to spill over? Echo He, senior analyst at the Maxim Group, joins us down the pipe from New York, and Daryl Guppy, of course, is with us as well. Echo, good evening to you. Do you sense that there's some renewed attention because of the Facebook effect and all the attention that they're getting toward proxies in the PRC?
They're getting towards the proxies of PRC? I mean, could you say it again? I'm sorry.
Now, how are they, basically, these Chinese names, are they getting more investment attention because of the attention that Facebook is getting?
I think so, of course. And in PRC, actually, Renren is exactly a similar service to Facebook. It's even a particular function and also user interface are very similar.
These companies we just mentioned, Renren and Sina, though, I mean, on the quarter, they actually lost money when you boil it down to the net income level. So are they fighting some pretty tough challenges in the Chinese market, or are they getting everything right and this is just seasonal and part of the process?
Both, I would say. First of all, the first quarter is the weakest quarter in, seasonally. And in order to keep their leadership, each company has to invest heavily into technology, into marketing, and also a new product. So basically, weak revenue plus a higher percentage of fixed costs. So that's triggered their loss. But for Sina, and it has a stable portal business, and the rest of the quarter, and the Sina could turn profit most likely. But for Renren, the burden is higher. Probably this year, it won't turn profitable, as this management already stated.
Echo, we're just wondering, once the Facebook IPO starts trading on the secondary market, will it take investor money away from some of these Chinese-listed internet companies?
That's actually hard to answer that question, and I guess market cap, they're still at different levels, and or they could be the same set of investors, I would say. So it could take some, but it's hard to quantify. It may not be too much.
Yeah, absolutely. It's like comparing apples to oranges when you're doing U.S.-based internet stocks and Chinese internet stocks. Daryl, why don't we get you to weigh in here on some of these charts, starting with Sina. Where do you see this stock going?
Key factor with this, in this face-off, Renren and Sina are clear losers. Sina has a strong established downtrend. We're looking for support coming in at around 55.50 thereabouts. We're looking for a rebound from this level, but the downtrend pressure is still there. It's not a Facebook effect. If we look at Renren, we see the similar sort of behaviours taking place there.
Okay, and what about Youku?
In Youku, when we get Youku up, we'll be able to see what's happening. But with Renren, you had a moment, hey, Youku, look at, we're trading sideways through here. We're trading sideways through here. There is limited behaviour, limited overflow from those participating in Facebook coming into Youku or Renren or Sina.
Well, let's go back to Renren then.
Okay, let's go back to
Let's be
Renren.
fair, yeah.
Yeah, let's do it.
Well, this is lots of people lying down. Look at it. We've got this support level sitting here at about $5.90. We've got resistance sitting through here at about $6.20. We're simply moving in between this sideways
Is
consolidation.
that the name of a technical formation? A lot of people lying down?
No, it's actually Renren. Renren means a lot of people.
I think it's called a zebra crossing or something like that, the way it looks. Back to Echo in New York. Echo, obviously, you know, the big names in the, in the internet, the Googles and the Facebooks of the world, have a very, very big challenge in terms of engaging China. Is it always going to be this way? Is the growth of the local brands in China going to be at the expense of them? Or do you think that, with the entrance of Xi Jinping and a new sort of a warmer sort of, approach to leading China, do you think that he might open the doors a bit? Do you think Facebook has a future in China?
I think Facebook in China's opportunities are limited because the Chinese government historically always had a fixed grip on this media control. And internet is relatively newer to the government, but right now the government is increasingly aware of the importance of this internet, especially when some important events hit China and social media network like Weibo or Renren becomes the forefront reporter. And that's actually the government right now are looking at these websites with a much higher level of attention.
Echo, Facebook has a fabulous user base, and that's what everyone is so excited about. But they're having a really tough time getting money from it, monetizing it, and getting investors to believe in their advertising product. We had GM pulling out. It's the latest story. Are the Chinese internet companies doing a better job of monetizing their user bases?
I think they probably have even a weaker luck than Facebook in the US or in the developed world, because general view that Chinese advertising market, especially the new digital media market, is at way early stage than the developed world. And for example, despite that Chinese GDP probably around somewhere 40% that magnitude of US GDP, but their online advertising market is overall around 10% of the U.S. online advertising market. And so in this sense, they're much early, and the people viewing online media, and especially those targeted media performed by the Facebook, I think in China is still experimental to most advertisers. So that gives them increasing difficulties there.
Echo, really appreciate your staying late and giving us the evening date there in New York. Looks like a beautiful Big Apple behind you. Echo Hood from the Maxim Group in New York City. And Daryl isn't going anywhere. He is strapped down, locked and loaded, and ready to head into the next hour of Squawk. So keep your emails coming in. Questions to squawk@cnbc.com. Okay, Tokyo, Sydney, and Seoul get set for the trading day in about 10 minutes. We'll set you up in a bit.